Rahul Chadha joins us, CIO with Mirae Asset Management. Rahul, good morning. Back to your desk after Saturday's fireworks.
Yeah, Nikunj, back to the desk in Hong Kong. So again, if you look at Hong Kong China markets, it's the coronavirus which is dominating. But yeah, one saw the budget on Saturday. A little disappointed over there. I think we could have done more in that budget to boost the growth. Looking at the fact that things are slow in India, and this was a good opportunity to take some of the measures. So slightly disappointed with that.
Rahul, we have to look at two aspects now. What coronavirus means for China, and it's unfortunate what's happening there. But a severe slowdown in China, what does that mean for India?
Okay, so I think Nikhil, there are multiple aspects of this. One is there was a broad view which was coming over last 3 or 4 months that look, EMs are going to do better than the developed markets, and with Fed expanding balance sheet, we had a reasonable amount of flows coming to EM over last 3 to 4 months. And China is close to, Hong Kong China combined is close to 45-48% of the EM benchmark. So obviously, as one gets confident on China, obviously flows come in EMs and India benefits. So that was really the whole thing. I think this coronavirus thing is still evolving. And look, this is a virus which is believed to transmit human to human. So again, the scare is that right now what we are seeing is cases in China. But would these cases get repeated elsewhere in the world is to be seen. So which is where obviously China comes under pressure. But then if we come to India, for India to stand out in terms of allocation, it was very important that growth comes back. And that's where hopes were on this budget that look, if government gives something for the construction sector, which may get again a broad-based recovery in the economy.
All right. Okay. Fair enough. Just to take it further in terms of what to expect now going forward, Rahul, we've got the budget. We've had a sharp reaction, which we'll wait to see how things stabilize today. And also, of course, given the global environment. But going forward, what really do you feel is the outlook for Indian markets? We have been trading at expensive valuations, at least on the Nifty. We've not got any near-term triggers now, apart from possibly something from the RBI, which looks highly unlikely for the moment. What do you feel is going to be the driver really going forward?
Okay. So if you look at the markets, growth clearly has bottomed. Fourth quarter in terms of the calendar year, 19 was the worst we saw, and things are going to improve from there. But like the way you rightly said, a lot of it is in the prices. Consumer staples, we've seen earnings, fairly subdued earnings. Valuations are expensive. Corporate banks have had a good run. They're still attractive from a medium-term perspective. So it was very important that the investment cycle picks up and then this growth accelerates. And an easy thing here was do something for the property, increase your interest rebates for mortgages, etc. For a time bound kind of a manner, and that would kickstart this. But look, with that not being there, we're back to the slower growth part. I think if you look at markets, there is deep value in PSUs. But what happens is with this relentless selling by CPSC, nobody is interested in touching PSUs. But if over next 3 to 6 months, we see a lot of these public sector enterprises giving away huge dividends, I think interest can come back over there.
I see also for you, Rahul, they're going to IPO soon. That is the budget announcement. I don't know the timeline, but it's going to happen.
No, clearly it's interesting. See, something which we all discuss is if you look at China, there's so many sectors to invest in. You've got internet, you've got education, you've got banks, insurance, consumption, etc. In India, if you look at our portfolios are dominated by financials. So you've got banks, insurance, which are 45% of most portfolios. Then you've got a little bit of consumption, etc. So a good company always gets more flows to the market. So that's taken positively. I think what was slight negative was this tinkering with deductions and giving options, etc. I think that's where our view is that, look, you need in an emerging market like India, you need to give reasonable incentives to people to save from a longer term perspective, more so in light of the fact that over the last 3-4 years, we've seen saving rates come down. The whole economy has been on this growth by consumer loans, etc. So which is where I'm not sure whether this is the best of the strategies, best of the measures to take away those deductions in due course.
Okay. Rahul, that's one side of it. The other side of it is clearly, everyone's talking about the fact that there was nothing to drive private sector investment. Do you agree? Do you feel that, we have been in the midst of a slowdown, even if the index isn't always reflecting that, and that the pressure will continue when it comes to earnings?
Yeah, see, the consumption slowdown will take its own course, and that's what we've maintained. That look, we've had this consumption boom which happened on back of rapid growth in consumer loans, etc. We've seen this kind of a peak out from early last year. It will take its own 1 or 2 years as the consumers deleverage. So this is something which has happened in all other economies. So that part of the economy would be slower. Now, only way to get the growth back is get it through investments. We've seen government do all the right things in terms of lower tax rates to attract new investments. But with the global uncertainty on trade war, I think people were holding back. So hopefully, as you get clarity post this coronavirus kind of coming under control, investment should pick up. But an easy way, again, I keep coming back to it, was look, property affordability is the best it's been in India for last 20 years. So easy way to kickstart demand is tell people that for next 2-3 years, probably you can deduct up to rupees 5 lakhs or whatever that number is from your incomes which is paid towards mortgage, etc., as interest towards mortgage, and that can get the real estate cycle going. And that's an easy way to do it because we are living in an uncertain world. So to be fair, it's not easy to revive the economy, but I think that's where one is seeing that the government measures are not really 100%. There were things which could have been done a lot more in this budget.
Rahul, you're in Hong Kong. How bad is it when it comes to the virus? Because now, officially 14,550 people have been impacted globally.
It's a bit scary here. So we all are doing our bit. So is for this interview, I've taken off the mask, but you'll see me with mask most of the time. So one is sterilizing and trying to just be safe. So let's hope for the best.
Okay, great. And thank you for taking off the mask for the interview. Good speaking with you, Rahul. Take care.
Thank you. Bye.